Hey, good morning, everybody. So this is going to be the watch list for Monday, October 14th. Now, what I do want to start with is Monday the 14th is going to be Columbus Day. So it's a holiday and the bond market is closed. So while the stock market might be open for trading, I can assure you that the volume will be relatively light. My recommendation is just take Monday off. If you want to sit around and wait and see what happens, so be it. But usually the moves are either muted because there's not a lot of volume, or they're very erratic. Again, because there's not a lot of volume, people buy and sell for the craziest reasons. So Monday might just be a holiday for you. Anyways, Tuesday, we have Empire State Manufacturing that comes out before the market opens. Wednesday, import prices. But again, where the focus is going to be is on Thursday with initial jobless claims, retail sales, and then retail sales minus autos. So what they're watching here is the unemployment numbers, as well as is the consumer still spending or are they pulling back? And then while the market is open, you're going to see some additional things with business inventories, home builder confidence. So Thursday's got quite a bit of news in the morning that you're going to want to pay attention to. And then on Friday, again, it's back to the housing issue. So we know there's not enough new home production. And mortgage rates are now back up to the 7% range, which is going to put pressure again yet on the housing market. So you've seen the builder stocks come in quite a bit over the past week or so as rates have started to move upward. So the 10-year Treasury yield is actually increasing, which is not what we want to see for the banks, which is not what we want to see for the overall mortgage market. And then the other thing that's been notated is homes that were on the market because rates were coming down are now starting to reduce their prices somewhat. So it's interesting to see of people who went to market, did they go in at a much higher price thinking that the buying demand was going to be coming in with rates going down, and now rates are actually going up. So this past week was absolutely crazy as we kicked off bank earnings on Friday and the stock market hit an all-time high at 580.33. Now, I think the highest analyst estimate out there is with BMO Harris that says that we will close at the 600 level by the end of December. But as you can see, we still have almost 70 days till the end of the year. Now, these are my levels. I don't plan on changing them. So what I would be looking for is a reject at 580.33 or up in this area where we know that we have had sellers. So there's a couple things you could see here. What I would watch is this general area to watch how does the market respond once it starts to get within this red zone here. So this could be your potential for a short opportunity. Your bounce wouldn't be until we get back down here to 577.06, where it was resistance, 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 turn to support. We would want to see this hold. If 577.06 doesn't hold, then I think we're back down to my magical 575 number, which has been holding on the hourly time frame for the last several days. And then if we break below that, I think we push down to 570, but I would look for a stop somewhere in between. And then the question always becomes is, Bill, well, I'm not exactly sure where should I take profits or where is the market going to stop? Well, what you want to do is always look left. And where did we find some overall stability before it started to push higher? So you could see right here at this 572, 573 level, it was resistance, 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 hovered around it, and then it acted as support. So this would be my intermediary on the way down to 570. So when you're going to take profits and you're always wondering, well, I don't know when to take them, or I took them too soon, or I took them too late. That's why it's important to have these intermediary zones. And then what you can do with them as well that I think are helpful is just make them a different color so that you're cognizant of them and you don't do a hard stop. But I wouldn't be going long up to, 585, 590 until you can break above this zone with some momentum and move higher. So let's take a look at QQQ. QQQ not as strong as SPY. Predominantly what really held this down was the fact that Tesla really missed on their overall robo-taxi projections, and how the market received it. It was not received very well, and we'll take a look at Tesla in a minute. But you can see with the Qs, we're kind of trading right here in between these zones. 490.96, 494.20. We're back and forth, back and forth. Now, I did put a stair-step floor in here for you to watch come Monday morning. So you could see that we held it all throughout the day. We're holding it in the overnight, and that number is 492.33. Again, we start to fail that. I think we head down to this 491. We fail that. Then we definitely head down to 489 and then back to where we had this consolidation zone. So don't overcomplicate things. Again, do your charting at the daily, the 4-hour, and the 1-hour, and trade the zones. It's really as simple as that. So I do want to take a look at a couple that we do have earnings coming out for a ton of companies. So be sure to check the Discord, check and see who's announcing this week because it could give you some really good plays. But what we do know on Friday is that the banks were insanely strong. So this is Citibank. Citibank clearly broke out of its channel that it was in. This is one that I've been watching and following for a period of time. It's also the one bank that has the lowest price to tangible book value. And the area that I would be watching for this is right up here at about $66 and change. Now we are approaching this. So if we can hold this level, and we're going to have more bank earnings this week, I think Citi is one of the names where you can wait to break above 66.03, retest it, and then go for this prior pivot high right up here. Now, do note, I don't always go to the very top of the candle of the high. I'll look and see where do I have the most amount of confluence, but you could take that up to 67.77. The other one that was crazy strong was JP Morgan, which again is approaching its all-time high. Now look at Friday. I mean, this thing moved from literally 210 to 222. A 5% move in one of the world's largest banks is just bonkers, right? So here was the previous pivot. So what I'd be looking for here is, can we break above this 222.29 and hold it? And then if so, what would I look to do? I would look to possibly go long and then be ready to short it up here at 225. So if we don't hold this level, I think we'll start to gradually trickle down. What's going to come into play are going to be the regional banks, the U.S. Bank, the PNC, the M&Ts, the Key Bank, so on and so forth, to see, are the money center banks really that strong, and are the regional banks coming up in their overall weight? So let's also go take a look at Tesla, since I mentioned it earlier. And again, really, they did not like the robo-taxi. So what I'm going to do is I'm going to remove my lines up here because we're nowhere near this. We had a trend line in the past. We had some overall support down here at 225 that they have broken through. So what would I want to watch on this one? Well, again, probably the strongest level for this stock is going to be down here somewhere at about 200 to 202. Does it mean that we're going to flush right to it? No, probably not. You potentially have to, wait and see what the news is, but you potentially have a bounce here at 210. That would be one that I would be watching. This other one is just too close at 207. So what I'd look for is, can you come down to 210 and get a bounce higher, or do they push it back up to this 225 and reject it? Let's just throw on supply and demand real quick. You can see that we're in heavy, heavy demand. But this is another stock that I think makes sense to go long, whether it's in your portfolio or whether it's going to be in some leaps. If you could get back near that 200 level, I think that's ideal. Would I be trying to short it here? No. Would I be trying to go long here? No. It's really a volatile stock, right? So, and we're in between the channel. So that's what makes this so dangerous, is when you're trying to say, well, we're going long or we're going short. Now you can see it's been a gradual sell-off. We are going to have, a gap above that we're going to want to be cognizant of, right? So we always want to know that we do have a gap up here. So I'm going to go ahead and drop that in for us so we can keep it for future weeks if we want to come back and revisit this one. So we have our gap right here, okay? we can then get rid of this line. Why? Because it overlaps with the gap. So we're going to use the gap above all else. The top of this candle high is 223.34. So I want to make sure that my chart is correct in 223 and 34. Okay, so you just go ahead and you're going to modify this. It's easy to see, on the charts that it looks good, but what you want to do is you want to make sure that you're really accurate, because this is where the market will come back up and retest on a lower time frame, okay? And then it will reject it to head lower. So now you play the gap fill between the 224 and the 209.73. So we'll keep that one on watch as well. The other one I want to look at that I was doing with some of the students this week, as we just finished up the October masterclass, that I think could have some room to the downside, is going to be Netflix. Now, interestingly enough, they got a downgrade. And this would have been a great one to play short, which I should have after I said that on my Wednesday night class. But let's go ahead and look at it on a 1 hour time frame. So you can see it's coming back to this overall level of where it had resistance, right here, resistance, then turn to support. So I do think that there's probably some room to the downside on this one. They have earnings coming up, so we might not see a lot of movement between now and then. It's going to be on October 17th, so later in the week. But where do I like an area that I think that there's probably some good overall demand and some buyers is going to be down here. And you could kind of just see how over time they've been holding it up. So I think that this is a potential short down to about 700. And that's what I would look for, is going out maybe past earnings to decide, do you want to play this as an earnings release, or do you wait for earnings, see what it does, and could you potentially get a buy here and then go higher? We flush below 700, then definitely I think this one is going to be heading lower. And then where would I target my next two is going to be this 662. Now this will obviously move in tranches to the downside. So what I would be paying attention to are, again, my areas are where are my pivots, okay? And then you keep those in hindsight. Now this one is pretty close, 688 to 680. So, I mean, you can see where it's bouncing, though. This one is going to be stronger because we got two bounces here. So this one, maybe not as important. But again, on the 1 hour, and that's how you want to think about the overall charting. Final one that I want to look at is a commodity, Alcoa, that has been literally kind of on a tear, that I think there's more potential room to the upside. So Alcoa with aluminum manufacturing, the commodity market, what's going on in China, you'll see that it somewhat had a double top here, okay, and it broke through it. What I'd love to see is a retest back down to $40.30, and then I think you could stay in this name long, all the way back up to about 43, which is a good size bounce, and then their options contracts are going to be relatively cheap. So do note that they have earnings coming up that is going to be on the 16th, so you might want to let the earnings come out and see what they do, but I'd be playing for a bounce here at 40.30 up to 43.10, and if they blow through it, then we're definitely going to go back and look at these prior highs here. Now, the interesting thing is with commodities, when you look at them on a daily time frame, look at how beaten they are from their all-time highs at like $98. So this is a great example why you just don't buy and hold and think that, oh, well, it's going to be coming back. I mean, that is a huge drawdown from the prior highs, which was in March of 22. So just for fun, we're going to do this. Let's do this on a weekly, because I don't do this very often with you guys. But let's go ahead and we'll set on a weekly. And it doesn't matter whether you do a fib level on a weekly, a daily, an hourly. They're all going to be the same. So just even look at the fib level on this for a 50% retracement. It's all the way up here at $60. So if commodities keep holding their momentum like they have been, and aluminum can go ahead and gain some strength and some overall power to the upside, I think I'd definitely be watching this one for a long. And with that, guys, I hope you have a phenomenal trading week, and make sure you stay in tune with the Discord, the signals, alerts, and really focus in on areas of interest. So while I'm giving you price levels, you want to watch how price is reacting once it starts to approach the level. You don't wait for it to hit to the penny. You want to watch the overall price action, which is how are the candles behaving, and then what is volume doing? What are your indicators doing? Your MACD, your VWAP, your EMAs, as well as your overall supply and demand. So hopefully with that, this was very helpful. And as always, I appreciate you, and we will talk next week. Have a great 3-day weekend for those of you who have Columbus Day off. We'll talk soon. Take care.